So get ready. We just received some CPI inflation data and it is fantastic. So what does this mean? Explosions are coming. The US market is exploding right now and Bitcoin is about to follow. Got a CPI reading. Okay. And the CPI reading is fantastic. Absolutely fantastic. So why is it so fantastic? Well, showing month to month and year to year falling. So year to year is still not falling, but close. But month to month certainly falling. So last month when we measured inflation in May, it was at 4%, which was already pretty low considering the month before was 4.9%. So that was a big drop, almost 1% drop. This time around, we did do a 1% drop. So from 4% all the way down to 3%. So right now, CPI is at 3% overall. Now, if you're just looking at core number, the core number is 4.8. It's still a pretty substantial drop from 5.3% to 4.8%. Okay. So why is this good? Well, it's pretty obvious. When inflation is going down, that means price of goods and services and commodities and everything else, right, has not been increasing in price. That's what it's showing, right? Prices of all these things are coming down, but they're still elevated. But what Powell wants to do is try to make the prices go down, 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 right, with his rate hikes. But because the prices are not rising up anymore, they're starting to come down, at least according to this number, although some people say these numbers are all faked. But according to these numbers, it gives less reason for Powell to continue his rate hikes. That's why it's positive. Whenever Wall Street thinks there's any reason for Powell to increase the rates, then you know what? They're going to sell off. But whenever they feel like Wall Street feels like Powell has a reason not to raise rate, then you know the market rallies. That's just how it works, right? So with this, it's pretty darn good. And also with this reading, DXY, which is measuring the strength of the dollar, has also went down. That's a pretty substantial drop. We are now closing at 100. We have not seen sub 100 DXY in a very, very long time. And a sub 100 DXY is really good because if you look at all the previous times, it was below 100. Well, during those times was when the tech sector, the crypto sector, and other risk-on sectors, they were blooming and they were pumping and skyrocketing. Now, outside of CPI and DXY, let's talk about Bitcoin, right? So I did just talk about DXY. So look at in 2021 when DXY was falling, okay? And then look at after it broke a certain point, that's when Bitcoin started rallying, right? And then you look at where we are now, though not identical to what happened in 2021, but the scenario looks pretty similar, where you actually see a correlation of Bitcoin's price with DXY, right? And how that gap narrows, and then you can see how DXY kind of hovers sideways a little bit, and then when it breaks through, you know, that 100 mark, right? Guess what's going to happen to Bitcoin's price afterwards, right? Very similar pattern. Moving forward, Bitcoin has formed a foundation under 30,000 according to Glassnode. Why? Well, there's many reasons, and there's so many on-chain metrics that show why Bitcoin is so strong at 30,000 and why it's probably not going to break below ever again. Well, here's one reason. The shrimps, people that hold less than one Bitcoin, continue to stack sats at a rate of 34,000 Bitcoin per month. Okay? Think about it. 34,000 being bought just from the shrimps. It's not counting the sharks or the whales or anything bigger than a shrimp. This is just the shrimps buying 34,000 per month. Yet there's 27,000 being released per month. So you do the math. There's more buying than being issued, right? There's more demand than supply. And this is just talking about shrimp demand. Shrimp demand, not everything else. So it's just a matter of time. So, I mean, just look at supply and demand and how it relates to price, right? In every single commodity, precious metal, every kind of investment, when there's more demand than supply, and with Bitcoin, the supply is diminishing and inflation rate gets cut in half every 4 years, I mean, it's just a matter of time before the price starts heading higher, right? And that's why every cycle, the price is higher. We may have up and downs, but we form higher lows and definitely much higher highs every single cycle. But it makes sense. It's not magic. It's not voodoo. There's just simply more demand than supply. Plan B says, congrats, you survived the worst Bitcoin bear market ever. Well, that is true because the 200 weekly moving average, Bitcoin hardly spent any time below it, going all the way back to even the early days, right? During our bear markets, Bitcoin briefly broke below the 200 weekly moving average. This time around, we broke through and stood below for a very long time, mostly because of collapse. We had so many black swans happen in 2022, right? With FTX, with Luna, with Celsius. That's the reason why. Otherwise, we may not have gone down so much. But nevertheless, we did, and we're back above. So you should pat yourself on the back if you're still here because you pretty much did survive the worst Bitcoin bear market. And the longest extending bear market too, the longest drawdown as well. Just not percentage-wise, but the time-wise, yes. So if you survive 2022, anything going forward, you'll be able to survive, really. Tim Draper still believes that Bitcoin will hit 250,000 by the end of 2025. Now, he previously declared that it was going to happen in 2023, but he said he misjudged because of all the FUD between the SEC and everyone else, right? He misjudged that. But he still believes that Bitcoin will reach $250,000 by the end of 2025, which makes a lot of sense because a lot of people know that is the end of this current cycle, this bull cycle. Okay, and that's when things get really, really bullish. And if you think about everything else that's happening, right, in addition to everything I just mentioned, but you think about everything else that's happening with even the macro environment, which I know a lot of you guys don't pay attention. I do cover macro stuff a lot. But if you think about this, also correlates with the macro conditions improving. You know, all the rate hikes and everything from the Fed and other central banks, that's all going to end in 2024, right? So if you look at that, that's also going to be very positive for the tech sector and for crypto. So it's all aligning. That's when the halving event is also happening in 2024. That's why second half 2024, 2025, it's going to be crazy. We're going to see money flow into the space unlike anything close that we have seen before.